you're submitting a self-assessment tax return this year, then this is the perfect video for you. Every year, so many people get fined by HMRC for submitting an incorrect tax return. Don't be one of these people, but because you're watching this guide, you should be completely fine. In this video, I'm going to be covering how to actually complete the return, the specific entries you need to make to ensure you're paying as little tax as possible, how to avoid any questions or queries from HMRC that could lead to a fine, and I might just throw in a few cheeky tax deductions so that you can slash your tax bill or increase your refund. But before we get into all of that, I just want to start off by saying that the main objective here, other than to slash your tax bill or increase your refund, is to make your life as easy as possible. What I'm about to say might sound a little bit strange, but trust me, we want to give HMRC as little information as possible, because the more information you give them, the more chances they have to ask questions and hit you with a fine. So for the questions or the boxes that have optional around them, most of the time we're going to just leave them blank. And as part of this guide, I'm going to be running through and giving explanations on all of the sections of the return. But the specific example that I'm going to be using is a self-employed person with no other income apart from their business. I understand that this might not be for your specific situation, but there's a lot of information to cover here, and I want to keep this guide as concise as possible. But if you have any questions around specific details that I don't cover in this guide, then feel free to shoot me a message on Instagram, Mark Accounting. All right, let's get into it. So the first section that you're going to do is the enter details about you. I mean, I'm not going to go into it. I've just got loads of my personal details on there. So if you just obviously go into there, double check and enter all of your personal information. And the first one that we're going to come down to is to tailor the return. So these are simple yes or no questions that are going to either add sections or not add sections into your tax return. So for example, if you say that you've got property income, then it's going to add in a property income section, etc, etc. What this is doing is it's making the return as easy as possible for you, so you don't have to go through the return and enter loads of zeros into boxes that are just not relevant for you. So just have a little double check here that the dates that you're doing the return for are the dates that you've got all of your details for. All of your invoices, your income, expenses, all of that needs to be relevant for this period. So the first question says, were you an employee or director or office holder during the year? So if you're an employee, you would probably know about this because you would get a P60 or a P45 from your employer. And this would be at the end of the tax year. And you also got director here, so if you're a director of a limited company. So the next question is about Class 2 national insurance. So this is a weekly payment that you make when you're self-employed or in a partnership. And if you pay these Class 2 national insurance contributions, then it means that you're entitled to a state pension. But these were actually abolished in April 2024. So if you're doing your return for the 2024-2025 tax year, then you don't actually have to pay these. If your business profit is over £6,000, then you're already treated as if you've paid them. And if your profit is under £6,000, then you can choose whether you want to pay them or not. But if you don't pay them, then that means that that year doesn't count towards getting your state pension. So something to be aware of. So my turnover from my self-employment is going to be more than £1,000, so I'm going to select yes. If your turnover is less than £1,000, then you don't actually need to tell HMRC about it, as this is covered by the trading allowance. So HMRC just don't really care, to be honest. And remember that this is combined self-employment turnover, not profit. So here, how many self-employed businesses did you have? So if you have multiple income streams, then you need to say here how many you have. So for instance, if you're a self-employed plumber and you also sell things on Etsy on the side, then this will count as two different self-employed businesses. So I'm going to select one here, and then it asks for the name of the business. Now, don't stress too much about this. It's more of a reference for HMRC. So if you trade it under your own name, just put your own name. Or if you've actually got a name for your business, then this is where it would go. The next question now asks if I'm in a partnership, and a partnership is basically two self-employed people that are working together on one business. I'm going to select no. The next question asks, did you receive income from UK land and or property, including some from foreign property over £1,000? So if you have a second home that you rent out with tenants in, then that will go in here. If you've got a holiday home, then that is also something that will go in here. I'm going to select no. The next question asks if we've received any foreign income. So this could be from employment if you lived overseas, or it could be from receiving dividends from foreign companies. Basically, if you receive anything substantial in a foreign currency, then you'll need to put it in this section. It's now asked if I've disposed of any chargeable assets or had any chargeable gains during the year. So capital gains apply when you dispose of a chargeable asset, and this could be even if you give something away. And not all assets are subject to this. For example, if you sell your house that you're living in, then this is a very good example of something that isn't chargeable to capital gains tax. But if you have a second property that you sell, then this is something that you would need to put on the capital gains section of the return. Another example would be if you sell any shares that you're holding in any listed companies. Also, if you make a loss on the sale of an asset, then you would put it in this section. So even though you haven't made any money, it means that you can still carry the loss forward to a future year, so that if you do have a gain in the future, then you can offset the two. The next page of the return now, so page 2, and it asks if you received any interest in the year. So in order to say yes from this section, I would say you would need to have a substantial amount of money saved and money in the bank to actually go over the savings allowances. So for a basic rate taxpayer, then that's £1,000, and then for a higher rate taxpayer, that is £500. And also remember that any money that you hold in an ISA is tax-free, so that wouldn't count and be put on this section. So as if I received any dividends in the year. So these would be if I held any shares in UK registered companies such as Tesco or Asda, and I received a payment from those companies in the form of a dividend, then they would need to be put on this section. And also if you received dividends from foreign companies up to £1,000, then they can be put on this section. But if they are over £1,000, then they need to go on the previous section that I just showed. Did you receive any UK pensions, annuities or state benefits? And unfortunately, some sad news, your pension isn't tax-free. So you actually avoid paying tax when you put into your pension, but then when you take the money out of the pension, then you then get taxed on this amount. Did you or your partner get child benefit payments during the year? So if you received benefits from the government relating to your children, and if you or your partner earn over £50,000, then this is the limit that HMRC will start to claw those amounts back from you. Did you receive any other UK income, for example, employment lump sums, share schemes, life insurance gains? I would say that these are pretty rare items that you would normally put in there, so yeah, just obviously if any of those do ring a bell for you, then make sure you put them in there. Have you made any income tax losses in the year? And a lot of people get confused and put their losses from their self-employment in here, but that is incorrect. Do not put anything from your self-employment into this section. This question usually relates to any of these above questions. Are you liable to pension saving tax charges in the year? So this is a charge that is given to people who pay a lot of money into their pension. So it's usually for high earners or high savers. So if you pay over £60,000 per year into your pension, then you will start to get charged for this. Go to the next section. Did you make any contributions towards personal pension or retirement annuity? So a personal pension scheme is separate from your employer's pension scheme. So if you're employed, then your employer will put some money towards a pension for you. But if you want to have a separate one to that, then you can set up your own personal pension scheme. When your employer contributes for you, this is before any tax has been taken out. But if you contribute personally into your pension scheme, then this is obviously after tax. So you will then need to make an adjustment so that you're getting the tax benefit of that. Some personal pension schemes do have a tax relief built into the scheme. So I would double check your specific scheme before putting anything on this section. That usually relates to the higher rate taxpayers. Did you give to charity? So I'm sure you've all heard of gift aid when you're making a charitable donation. So if you do give to charity, then make sure you put it on this section, as you can get tax relief for those donations. So if you were born before the 6th of April 1935, you could claim the married couples allowance. So this was basically an allowance that got given to you from the government if you're married. And then it asks if you want to claim the marriage allowance. You have to opt in for the marriage allowance, and this is for if you or your partner earn less than the personal allowance. You can then opt to transfer some of that personal allowance to the other partner, which means you save more tax. Do you want to claim other tax relief and deductions? Again, this section is very, very rare that you're going to have anything that goes in this section, but obviously if you do read this and any of them, if you do have some of them, then make sure you put them on. Have you had any income tax refunded or offset by Job Centre Plus? And your universal credit does not go in this section. Did you have a tax advisor? If you're doing a return yourself, then you should definitely select no. Have you used one or more tax avoidance schemes? This is a very good way for you to end up with a court case on your hands, because if you say yes to this, then HMRC are just going to probably investigate you, and there's been so many people that have said yes and put in the scheme details, and they've ended up in court and they've usually lost the case. So make sure you're selecting no. Are you acting in capacity on behalf of someone else? So if you're doing someone else's tax return for them, then you would select yes, but if you're doing your own one, then you select no. So back to the main screen now, and you can see here that now put the details in there and now says entered. So like I was saying before, if you said yes to some of those questions, then it's going to add in extra sections. So because I said yes to the self-employment, you can see here it's added in an extra section for the self-employment details. So we're going to go into this section. The first question we come to is, did you have an annual turnover of £85,000 or more? So your turnover is all of the income lumped together, and the reason why it's £80,000 is that this is also the threshold for VAT, and it's the threshold to use the cash basis of accounting. So if you select yes to this question, then it's going to flag it to HMRC, so that then if you're not registered for VAT, then you're probably going to hear from HMRC. Also, if you select yes, then it's going to come through with some more options of things for you to enter. The next question asks about basis period reform. So what this means is that you can select any day of the year to have your financial year end, but if this is outside of the dates of the tax year, then what you need to do is you need to do an additional calculation to bring your income and expenses in line with the tax year. So to keep things simple, I would select a financial year end date of any day between the 31st of March and the 5th of April. So when you select no for this, you then get hit with loads of different tick box questions. So if you have a little look at these and see if any apply to you, and if they do, then you could get some additional reliefs. So have a little run through them, but yeah, most of you will probably just say that none of these apply. So now for the details of the self-employment. So like I said at the start of the video, don't give HMRC too much information. Keep it as basic as possible. It will just make your life very, very easy. So description of your business, keep it basic. If you're a plumber, just put in plumber. Postcode of your address is optional, so I would leave it blank. Has your business name changed in the last 12 months? If it has, then you'll need to put it on this section. And if your business started after the 5th of April, then you'll need to put the start date in there. So this is to do with the Class 2 National Insurance contributions. So you only pay for the weeks in the year that you were actively trading for. So if you started after the start of the tax year, then you won't have to pay for the dates that you weren't trading for. Did your business cease trading? So if you say yes to this, then HMRC will not expect a return from you in the future. Select no, and we shall continue. So the next section is now your accounting details. So the date your books or accounts are made up to. So like I was saying just a minute ago, I would choose a date between the 31st of March and the 5th of April so that it's in line with the tax year, and HMRC will then know that you're not liable for any of the basis period adjustments. So now it asks if you use the cash basis, and the cash basis is basically a simplified way of accounting. It means that your tax return is pretty much done based on your bank statement. If you take your bank statement for the tax year and look at any money you've received or any money that you've paid out that relates to your business, then those are the figures that are going to be included in your tax return. The other method that you can use is the traditional accounting method. What this means is that if the work is carried out and you invoice for it during the tax year, then it would be included in that tax year, even if the customer pays after the tax year has ended. This works exactly the same for expenses. My advice is that if you're a small, straightforward business that doesn't plan on growing above the £85,000 limit, then use the cash basis. It just keeps things a lot more simple for you. So now for some of the numbers. So turnover, this has got to be under the £85,000, as that's what I've said previously. And also, like I mentioned previously, this is going to be based on the money that you've received and money that you've paid out during the year. Business income includes all money earned from selling goods or services as part of your trade or profession. This covers sales revenue, tips, and any other income that is directly related to your business activities. So I'm going to put in £80,000. Any other business income, and I would say this is probably most likely not going to be used, but something as an example that would have gone in here would have been if your business received a grant from the government, like I know some did with the COVID payments during that time. So the trading income allowance, and this is £1,000. But if you have expenses of more than £1,000, then use these expenses. You can't use the trading allowance and also claim for expenses. It's either one or the other. But you can't take this allowance to generate a trading loss. So if you have turnover of less than £1,000 and you try to take the allowance of £1,000, then it's not going to like that. So you can see here it's giving me a total business income of the £80,000 that I put in above. So now it asks about expenses, and it asks how would you like to record your expenses. And you can do this as a single total value, or you can do it as a detailed breakdown. Look, as I've mentioned before, we want to give HMRC as little detail as possible. The less information we give them, the less chance we've got of being questioned by them. So you want to opt to use a single total value. So this total allowable expenses figure here is going to be made up of all of the expenses that are wholly and exclusively for running your business. These can include office costs, travel, the cost of buying your stock, marketing, professional fees, and any other allowable expenses that are necessary for you to operate your trade. In terms of expenses, I would say that in this section, you need to make sure that you're including absolutely everything that you possibly can. This is going to be one of the sections in the return that's going to have the biggest impact on your tax bill or your tax refund. You need to make sure you're including all of the cost of your goods sold, materials, your phone bill if you use it for work, and some of your house costs if you work from home. I've had it with so many of my clients. I've just been able to unlock thousands of pounds of savings almost instantly. I think it's because people are just being very cautious when doing their return, and they don't quite know what they can and can't claim for. They're worried about putting incorrect things down and then getting a fine from HMRC. But if you have an accountant that knows what they're doing, then you can take away all of that stress. So I'm going to put in £10,000, which is then going to give me a net profit figure of £70,000. So the £80,000 turnover minus the £10,000 expenses. The next section of the return is the capital allowances section. So if you are using the cash basis, then you're pretty much not going to use this section. The only time you would use it is if you've bought a car during the year. This section relates to your bigger purchases of items such as equipment, vehicles, machinery, etc. So you can get tax relief for these purchases. For example, if you buy a new laptop for your business, then rather than putting it on your expenses section, you can put it on your capital allowances. And what this means is that you're spreading the cost of your purchase over multiple tax years. This is another really, really important section that is either going to slash your tax bill massively or drastically increase your refund. I've had so many clients that had absolutely no idea about this section. So if you've got any questions about it, then make sure you shoot me a message on Instagram, Mark Quick Accounting. This is the perfect time for me to introduce to you a limited time offer that I'm currently running. If I can't get your tax bill lower or your refund higher than the previous year, then I will do your tax return for free. And if you want to take me up on this unbelievable offer, then make sure you go to markquickaccounting.com and book in your free consultation. But be quick because it won't be around forever. So if you have more than one self-employed business, like I mentioned earlier with the plumber selling things on Etsy on the side, then you'll need to do each of these sections separate for each of the businesses. So you need to make sure that you're splitting the revenue that you earn from your plumbing jobs compared to selling on Etsy to each put into their own section. And remember, you'll also need to do this for expenses. So in the next section, we've got goods or services for your own use. So if you are selling on Etsy and you buy something that you then want to use yourself, then you would need to adjust for this in this box. God, the amount that I'm mentioning Etsy, they might as well sponsor this video. Losses brought forward from earlier years. So if you have a trading loss from a prior year that you then bring forward into this year, if you make a profit in this year, then this section means that it will then reduce your taxable profit. Any other business income not already included, again, it's very rare that you're going to use this section, but like I say, if you want some more information, then you can just click on the box and it will give you some more information about it. Now you've got your total taxable profits from this business, which is £70,000. So again, it's taking your turnover and then minusing your expenses, capital allowances, and this is the figure that you're going to be taxed on for this business. So now we've got loss from this year itself against other income. So what this means is that if you make a loss from your self-employment, but you have other income, say from employment, then you can then offset these two with each other. Losses to be carried back to previous years. So if you are making a loss, then you can carry it back to a prior year profit, and that will give you immediate tax relief. So total losses to be carried forward. So if you do have a loss that isn't fully offset by some other income, then this means that you can carry forward the remaining amount into a future tax year. And there's no time limit for this. You can literally just carry it forward for as many tax years as you want until you eventually make a profit. So the next bit is deductions on payment and deduction statements from contractors, construction, industry, subcontractors only, also known as CIS. So what happens here is that construction workers usually get deducted 20% tax directly from the source, and this doesn't usually take into account for the personal allowance. So they've paid 20% of tax on all of their income. So if you're a basic rate taxpayer, then it usually means that you then get a refund from HMRC. So as this is tax that you've already paid, then make sure if you do have any of it, then you're putting it in this box here. So the next section now asks about class 4 national insurance contributions. So there are some specific situations where you may be exempt from these, but they can be quite rare. But if they do apply, then make sure you tick the relevant one. I'm going to say that none of these apply. And let's go on to the next section. So now we get asked if there's any other information about the business that we would like to tell them, and as I've said already, we want to give them as little information as possible, so just leave this blank. Now we are presented with a summary for this business. So you can see the name of the business was example, so this is going to be specific for each section of your self-employed businesses. You can see there we've got the business income of 80,000, the expenses of 10,000, which then gives us a profit of 70,000. We didn't put in any capital allowances or adjustments, so they're all zero, which then gives us the total taxable profits of £70,000. This next section is now full of generic questions that everybody will get asked regardless of what you put at the start on the Tailor Your Return section. So the class 2 national insurance contributions, so like I mentioned earlier, these are if you want to be entitled to a state pension. So if you do want to pay your class 2 national insurance contributions voluntarily, then you can if you want this year to count towards your state pension. It now asks if there's any amounts of underpaid tax for any earlier years. So if you have anything on this section, then you most likely would have received a letter from HMRC. So if you did, then make sure you put that amount in this box. Now ask about any amount of estimated underpaid tax for the year, and I'm happy that this doesn't apply to me, and so I'm going to put in 0. And just as a general note here, if there is any pre-filled information in your self-assessment tax return that you think might be wrong, say for instance your employment income, then what you should do is you should double check the information that you have on your records compared to what's in the return, and if you think that the return's wrong, then you need to update the return, and then you should then contact HMRC to let them know what's going on. Amounts of any outstanding debts, again this is going to be 0. So next it says about overpaid tax and how you can claim a repayment. So if you have paid too much tax during the year, then HMRC are going to send you a repayment, and you can nominate the account for this repayment to be sent to. So next it's going to ask about any adjustments if you owe tax. So if you have employment income or if you have income from a pension, then what you can do is if you owe tax to HMRC, then you can elect to have this tax collected through your tax code. Now this could be very helpful, but you want to make sure that you're submitting your tax return fairly soon after the tax year has ended to take full advantage of this. The next box is down here. It's very rare that you're going to put any figures into these, so just double check those. So now they're asking, does this return contain any provisional figures? So if you select yes to this question, then what it means is that you can submit the return now, but then in the future you're going to need to come back and update these provisional figures. So if you do have provisional figures and you've got a little bit of time before the deadline to submit the return, then I would just say just to wait until you have the actual figures. Because if you say yes to this question, then it's just going to make your life a lot harder. Again, any other information we are going to leave blank. And do I want to add an attachment to my return? I don't. So once that is complete, we then get taken back to the main section, and you can see there all of the information has been entered. So when you select next, this is now going to take you to a summary of the figures that you entered. So you can see here, this is saying the amount of tax that I'm going to owe for this tax year. And it also mentions about the payments on account. So what a payment on account is that if you owe a certain amount of tax during the year, then what they would do is they will then break this payment down into future smaller payments that you pay before you submit your tax return. Say for instance here it's saying that I owe 19 grand for this tax year, and that I'm then gonna need to contribute nearly £10,000 towards my future tax bill. So with the payments on account, what you can do is that if you've earned a certain amount during this tax year, but in the future tax year you know you're going to earn less, then you can elect to reduce your payments on account. And if you've already paid a payment on account towards this current figure, then that is not going to be taken into account on this page. But when you go back to your home page, you will then see that the figures are adjusted for the money that you owe. So if we then come down to the bottom and go on view and print your full calculation, then this is going to give you some more details about the calculations that are going on in the background. So we can see here the profit from self-employment is £70,000, and as we're entitled to the personal allowance, this is then being taken off of this amount to give us the total income where tax is due on the difference of those two figures. And then of that figure, we can see that the basic rate band is £37,700, which is 20%, and then the remainder of my income is then taxed at the higher amount of 40%, which then gives me a total income tax due of £15,000, and then you've then got to add on your national insurance contributions. And there you go. When you then go through, it then asks if you're going to claim to reduce your future year's payments on account. So then once you then go through that, it then says you've not yet submitted your return, so you then need to go down and then hit save and continue and then follow that process. So there you have it. You now have all the tools that you need to be able to submit your own self-assessment. The only issue with doing it yourself is that it can be incredibly stressful and time consuming. And not to mention, I can almost guarantee that you're overpaying tax. So if you want to slash your tax bill and break free from accounting headaches, then make sure you head over to marketaccounting.com to book in your free consultation with me. And don't forget, if I can't get your tax bill lower or your refund higher than a previous year, then I'm going to be doing your return for free. And if you're not quite ready to invest into an accountant, then you can sign up to my free email list. And this will give you 30 ways in 30 days to slash your own tax bill.